Pinduoduo. Today we're going to talk about this company which most who don't speak Mandarin can't pronounce it. Pinduoduo is actually a very interesting company simply because they have created this new C to M model. Let me flash this up for you to see. What do you realize? It's actually kind of like a group buying process, correct? You invite me, I invite you. Together when we buy, we get a group discount. Kind of like an evolution of Groupon. And just to clarify things, C to M is actually not customer to many. I used to think it's customer to many until this research. It's actually customer to manufacturer. So it's slightly different from what Alibaba and JD.com is doing. C to M model is something that Pinduoduo really innovated and made a name for itself. And today, we have 10 interesting points on Pinduoduo that you should take note of. And before we dive onto it, let me show you the opportunity. Right now, what do we see? Pinduoduo has actually surged in terms of share price, correct? In March 2020, when COVID-19 was running rampant around the world, it was at $33 per share. But it rose very rapidly, 6 times in fact, all the way to 5th of February, $196. Then was the peak, and then it came sliding down for 30 to 40%, and right now, as of this time of filming, it's about $120 thereabouts. Now today in this quick tutorial, I'll share with you 10 key points, and with this you get a good overview of Pinduoduo, what its business is, what the opportunity is, and where is the growth rate that everybody is so excited about. So if this topic interests you, continue watching on. Hi guys, welcome back. Now Pinduoduo has really reinvented this team purchase model, C to M, and let me pull up this first thing over here. What do you realize? It's a fantastic interface, correct? And the main thing that you should take note of is this app actually promotes interaction between each user. So I can talk to you, you can talk to me, I can invite you. Together we can invite more people. So this is really what is making this C to M model work so fantastically. So this is the first thing that you should take note. Pinduoduo's app actually promotes a lot of interaction, way more than what most people think. And that ties in with point number 2, which is Pinduoduo is a very highly engaging app. And what do you see over here? Games, correct? I was reading through some material by Founder Colin Huang. He's mentioned that men like games, but women really treat shopping like a game. So he's really made his whole app and interface very interactive, put a lot of focus to things there. Add in games, keep people really glued to it, and invite friends and family onto the app itself. That's why it's grown so phenomenally. Fast growth, that ties into point number 3, which is Pinduoduo as of this time of filming is only 6 years old. Such a young company. Most companies out there, the big tech players like Amazon, they are 20 plus years old. Alibaba is close to 20 years old, but Pinduoduo is only 6 years old, and later there'll be interesting fact for you to know. Even at such a young age, it's managed to IPO itself on Nasdaq, and that's where you can actually purchase the stock if you're keen. And what they've done with this IPO money, what I've read is they've actually went to poach a lot of talent. They are willing to pay more than 30% what Alibaba is paying for its developers and staff. More than 60% of what JD.com is paying its staff. So they've really been on the lookout for hungry young graduates to come on board and really work hard to drive this app and bring it to the rest of China. Point number 4 on how Pinduoduo has been able to grow so fast is it actually rides on WeChat. WeChat is the dominant interacting app that is in China. And what does WeChat do is they allow payments and they allow conversations. So Pinduoduo is actually riding on WeChat Pay, and the good part of it is with this leverage, they actually tap on WeChat's network immediately. Of course, that brings a problem. If WeChat are bad terms with them, then that could be a risk because they are very dependent on WeChat. But the good part also is WeChat actually owns 15% of Pinduoduo. Let me show you a chart of things. You guys that Founder Colin Huang actually owns 35%, but Tencent actually owns a very significant 15% stake in this company. So will they break off in future? Maybe, maybe not, I don't know. But I do believe that it's to Pinduoduo's advantage to one day build its own payment system and stuff. I think it's not beyond the development team, and it's something they need to do to protect its own interests, just in case the relationship with Tencent sours in some point of future. Now let's move on to point number 5, which is Pinduoduo right now has more users than Alibaba. Yes, you have heard it correct. They have more users than Alibaba, even though Alibaba started 10 years in front of them. But this user base is mainly in China's Tier 3, Tier 4, Tier 5 cities, which is not Beijing, Shanghai. These are the more rural areas where this group buying of toilet roll, groceries and stuff, it can really save a lot of money for the lesser earning Chinese right there. So what we can also see is that this chart shows that while Pinduoduo has indeed more users, its market share of the total e-commerce pie is very small, still 7%, although it's growing quickly. This 7% means that while they have a lot of users, per revenue or per transaction is much smaller than what Alibaba and JD.com is driving, because each item possibly costs very cheap. Alibaba sells bags, clothes and stuff. Those are more expensive. But when you buy groceries, toilet rolls, possibly the amount is smaller. But having said that, let's bring on back some important charts for you to show the user base growth. And if you see what I'll be focusing for you over here, you realize that for March of 2021, they have actually grown year on year, 31% increment in terms of active buyers. And when we were researching this topic, before I get there, smash our like button, because it's taken our team hours to present this and really do some interesting case study for you. So really appreciate, smash the like button so that we can reach a bigger audience together. So what we realize is this active buyer, while it's increasing, there are reports also that they include people who have not purchased, people who just added things to their cart but did not actually complete a purchase, maybe just testing a system or no money to purchase. They've also considered them as active user. That is a method that's possibly different from other e-commerce players, how they classify active users. So that is a key risk to note. Are numbers inflated? So moving forward, that's something you should keep track of if you're keen on Pinduoduo. Now let's move to point number 6, which is with an increase in user base, naturally the revenues are growing, correct? And I have actually interesting charts for you to see. Take a look at this over here. You realize that year on year, comparing first quarter 2021 2020, you realize that it's jumped 161%. Wow, that is phenomenal, correct? How can you grow revenues by 2.5 times, 2.6 times? I think that's quite unseen. And one of the key things that I've also discovered that I'd like to highlight to you also is, while they have grown their revenues, an important matrix is that the cost of revenue has also increased significantly. You see over here what I've arrowed. You realize that previously it was 20+%, but in fourth quarter 2020 and first quarter 2021, they've actually jumped to 43 and 48% respectively. Now, if you're keen to take a guess on why this cost of revenue has increased, that is in point number 7, which is this. They've actually thrown massive, crazy discounts to its users. Now, take for example this. Pinduoduo has actually offered the iPhone SE at a discount of 400 renminbi. Is this on their own monies? Maybe. But when there's a good deal, of course, you'll be inviting your mother, father, cousin, friend to join and buy iPhone also. And that's why iPhone has, in what we found out also, restricted third-party sales because they don't want the brand to be damaged by discounts and stuff. iPhone controls prices to maintain brand status. So Pinduoduo has actually not only tested iPhone crazy sales, they've also done Tesla sales. And in this article, which I'd like to show you also, they've done Rolls-Royce discount sales, 1.22 million yuan cheaper. Now, when I see this kind of things happening, I'm concerned. Is this sustainable? Is this going to be brand loyalty ultimately? Because when we look at the case study of Groupon, we realize that things fizzled out because brand loyalty was not there. So that's something I'll be keeping close tabs on for Pinduoduo, and that's what I'll be updating you along the way. So smash on the subscribe button so that when we track Pinduoduo down the years, you'll be notified of it. Now let's move on to point number 8, which ties in very closely with point number 7, which is when they give massive discounts from their own money, naturally they are making losses, correct? And that's why point number 8 is Pinduoduo has actually not been profitable since IPO. Now, a lot of growth companies out there are not profitable and for their own reasons. And a lot of growth investors don't really focus too much on losses. But when we look at a business, when they're throwing discounts just to drive in revenues, is that sustainable? That really requires some further thinking. Because if you see in the charts over here, you realize that they've lost more than 3 billion renminbi, which means sooner or later they'll deplete away their IPO monies, correct? So that's a concern that I have, and that's something that I'll share further in our private members channel. Over there, I'll be sharing a little bit more details on other findings that we've done, comparing it against JD.com and Alibaba so they can get a full picture of how to invest properly. So if you're keen, look for a join button, go for our private members channel. Now, in a quick span of things, we've moved to point number 9, and stay tuned because I've actually a bonus point right at the end for you. And point number 9, let me touch on it, which is Colin Huang, the founder, the driver behind the business, has actually stepped down and left the company already as of March 2021. Now, with further investigations, we realized that he's actually passed on CEO responsibilities to his friend, close colleague, Chen Lei. And then with that, he's actually moved to chairman position. But as of March 2021, he's actually announced that he's stepping off and leaving the company to pursue his own interests. Now, think about it. Jeff Bezos left Amazon. But having said that, Amazon was already running well with a full established C-suite running it for him. He was speculated to be not too involved in Amazon already. He was playing more with Blue Origin, his rocket company. So what about for Elon Musk? If he leaves Tesla in his high growth phase, would it impact business prospects? So there's something for you to consider. Colin Huang, the chief of this business, has actually moved fully away from the business already. And point number 10 that I have for you is to take note of the C-suite structure of Pinduoduo. What we can see over here when we scroll through is Chen Lei now is the chairman and CEO, correct? He really has absolute power of the business. There seems to be some lack of governance, in my opinion at least, but there is no COO, there is no CFO. So it's really kind of like a young company without adult supervision on governance. There's only independent directors over there which don't have a lot of executive power, in my opinion. So it shows that power is residing a lot in one person and that there's no delegation. Moving forward, would that be a detriment to his growth? That is something to take note of. Now, I promise you a bonus point, correct? And that is this. Cathie Wood, ARK Investors CEO, has actually invested into Pinduoduo. Despite some of the points that I've raised, some of the concerns I've raised, she has actually invested into Pinduoduo. This chart over here shows that she's built up stake of Pinduoduo from March 2021, and that coincided with some decline in the price itself. The timing wasn't fantastic, but she's gradually accumulated, and the position right now is possibly at an all-time high. So Cathie Wood has faith in this company. What about you? Leave your thoughts and comments in the sections below. I'll be keen to hear from you. And with that, let me invite you to a previous tutorial I've done on ARK Invest. This tutorial over here shows some of the concerns I have on ARK Invest, some of his strategies. Good or bad, invite you to the tutorial to discuss a bit further. With that, I'll sign off from here. Take care and goodbye.